Hello, everyone, and welcome to today's webinar on expanding your Shopify store beyond Australia. So, unless your Shopify business is a side hustle, breaking into new markets makes sense, especially for Australia, New Zealand business owners. However, this can seem very scary if you've never done it before, especially when it comes to navigating it for your accounting. So we're very lucky to have Jason here today, who has helped countless e-commerce businesses do just this. So Jason is the co-founder and director at Intrepid Advisory, and Jason works exclusively with e-commerce clients and brings over 20 years of experience. So you're in very safe hands. Anything to add there, Jason? Do a good job?
No, that's great. Thank you for the introduction. So we primarily work with Shopify sellers and Amazon sellers in Australia looking to expand into overseas markets. And as you pointed out, it can be quite daunting, but we're here to kind of give the confidence for people to make that decision and go ahead.
Cool.
And also, Ellen, who are you?
Yeah, I'll get into that. So I'm Ellen. I am the partner marketing manager at A2X. So I work with accountants and bookkeepers to make sure they have the resources and expertise they need to serve e-commerce clients. Half the time I'm actually learning from accountants and bookkeepers. But I'm here today to moderate and to make sure all your questions are answered.
And keep me under control.
Exactly.
Okay, so let's just quickly go through why we're doing this today and who we're talking to, really. So this is based on the experience that we see with our clients. So one of the benefits of working in e-commerce is we see the patterns that repeat. And this is a very typical life journey of a Shopify seller. So a lot of sellers start out as a side hustle and they'll start selling in Australia because that's the market they know and it's easy. They'll start fulfilling from their garage. But they'll get to a point where they'll start treating that as a serious enterprise and will start working on it full time. They might start using 3PL in Australia to fulfill. Once the Australian market is either tapped out or you're really serious about growing, you might start looking to expand selling in overseas markets. And the typical journey is you look at New Zealand first, because New Zealand's a friendly country, as we can tell from Ellen. Hi, Ellen. Similar language, similar culture, and easy to fulfill from Australia. So you just pop it in the post. And that typically is the first starting point to gain confidence in selling overseas markets. Once New Zealand is kind of conquered, the next place is typically the United States because it's such a big market. And again, similar language, different culture, different kind of way of advertising, reaching your audience. But that US and then the UK is the typical journey where you're fulfilling from Australia. Once you got a critical mass in a country, you would look to fulfill in that country. So you might be looking at either getting a fulfillment agent or a 3PL to actually warehouse the stock in that country. And that's probably the third point that we're going to cover off today. Beyond that, we're not going to look at. So you might, beyond just warehousing the stock in a country, you might then look at getting staff, employees, or an office in that country if it gets really big. That becomes, again, more complex, but we're just going to kind of stop at where you're fulfilling in that country. So that's going to unleash tax issues and accounting issues for you. So that's the typical global growth journey of a Shopify seller.
So today we're going to look at Australian GST. So how to easily identify export sales so you're not overpaying GST. I think this is something that a lot of businesses do. They kind of lump all their sales in together. We will also be covering foreign sales taxes. Again, what are the triggers for these sales taxes in the different countries? We'll look at foreign currencies, so the additional complexities and costs when selling in currencies other than AUD, and so all the things to consider there. And then as a reward, once you've learnt all of those things, we're going to be going over some export grants available to you. So what government grants are there to assist with promoting your products and in these overseas markets. But yeah.
Yeah, such exciting topics. So we're not going into the actual, technical aspects of, your Shopify store. That's probably best left to those experts. So really focus on the impediments that kind of stop people from doing it. And that's the tax and accounting. So
yeah, we just put this disclaimer in here, Jason, just that this webinar is intended to be general, but to consult a tax expert to understand your business's specific requirements. So if you are watching this on demand, there will be a link in the description to Intrepid Advisory, so you can reach out directly to Jason, who is an expert.
Okay, so as Ellen has kind of already hinted at, the starting point we thought today would actually be useful. Let's actually start with Australia, because there's actually a lot of mistakes that are made initially when you are on that global growth journey. And so, and it's also useful to understand the Australian tax model because it actually equally applies in overseas markets. So I thought it'd be useful. Let's actually start with what are the GST requirements in Australia once you start selling on Shopify. That's your base case scenario, and then it just gets a bit more complex after that. So in terms of GST in Australia, there is a requirement to be registered for GST once your turnover in Australia, or once your turnover exceeds more than $75,000. Now, this period is a 12-month rolling period. So one of the mistakes that people think is that it's perhaps $75,000 in an income year, in Australian income year being 30 June. But it's from today. So it's either 12 months from today, are you going to make $75,000, or in the past. So have you made $75,000 in sales in the past 12 months from today? And if that's the case, you should have been registered 12 months ago, or from the start of that, when you made the $75,000. So that's kind of the first, the first trigger you need to kind of be aware of being required to register for GST. Now, the other mistake or misconception that we see a lot is that once you're registered for GST, you're then required to collect GST on your Australian sales on Shopify. So there is a base case assumption that your listing price, or the price that's in the cart, is inclusive of Australian GST. So, so whatever you're advertising on the Shopify store, there'll be the price. So it's an assumption then that amount is inclusive of GST. You can adjust the settings in Shopify. Here we are going to the technical parts that we said we wouldn't. You can adjust the settings so that in the shopping cart, it does show that GST separately, but it won't show it.
Right.
Yeah, but
sorry, I was going to ask, do you find that some businesses that have come to you, they've been just selling their items and then they get a GST bill and they've not accounted for that in pricing?
Yeah, so, and this is why it's one of those mistakes. So, they've triggered the requirement to be registered for GST, 12 months ago or whenever. And so they've sold goods not thinking that they're actually going to lose 1/11 of the sales.
Right.
So, and we'll go through an example in a moment of how that works. Yeah. But yeah, that's where we see a lot of, I guess, initial kind of anguish that they weren't aware of this earlier. So you're selling quite happily, doing well, but then you discover that 1/11 of your sales price is going to be paid to the ATO. So one of the things that you need to kind of revisit when you are required to register for GST is, well, do we need to reflect that in our pricing? So do we need to revise our pricing? So who's going to wear that cost? Is it us, or is it going to be the consumer? You know, do you have the elasticity in your pricing? Can you command a premium to add on that GST? Now, the good news is that the GST is only applicable to sales within Australia. So if you're selling to an overseas customer, such as Ellen in New Zealand, there's actually no GST, no Australian GST required to be paid on that product. So let's look at that from the theory to how it actually turns out in practice. So here's an example here, Ellen, of what we were talking about before. You're selling to an Australian customer and you're required to be registered for GST because you sell more than $75,000 in a 12-month period. And your list price on your Shopify store is $110. So 1/11 of that is assumed to be GST. So from that $110, you are required to remit $10 to the ATO. And so your net sales revenue is going to be $100. Now let's compare that to the situation where we're selling a product from Australia to you in New Zealand. You still pay that $110. That's the list price on your Shopify store. But it's GST free. So from an Australian perspective, there's no Australian GST because Australia likes to encourage exports, and because GST is a consumer tax, the consumer isn't in Australia. And so that's why it's treated as a GST-free export. And so what that means is the sales revenue is $110. So from an Australian perspective, at least, and assuming that there's no other overseas tax requirements, it is more profitable to be selling as an export product.
Right.
Now, the mistakes that we see, so we've already uncovered the first mistake is, people are selling on Shopify, not realizing that they're required to be registered for GST in the first place. The second mistake is they might be registered for GST and doing a BAS. So a BAS is the quarterly GST return, so a business activity statement. And they might be using, a bookkeeping product such as Xero, but they might be doing it in a fairly crude and unsophisticated way. So the typical way that we see, Shopify obviously batches the sales and will do a payment, let's say once a day, and you'll receive one payment into your bank account. And that might cover both Australian sales and international sales. And what the mistake that people see, or that bookkeepers make, is they'll use that bundled payment to record the sales revenue. And they'll assume, well, that's sales, there's GST on that. And so one of the first jobs that we do when we look at a new client is, well, do you have any international sales? Because if that's the case, we need to unbundle that Shopify payment and extract out the GST-free sales, because that's actually going to save you money. So as we saw before, you're not paying that. You get to keep that $10 on that $100 sale. Now, the tool that we use, do you know what tool we use, Ellen, to do that?
Do you use A2X?
Yeah, we use A2X.
Handy tool, isn't it?
Yeah. So the solution is we use A2X to actually unbundle that. So that's one of the features. So what it does, it says, hey, look, you've received $1,000 today. $200 is actually to New Zealand. So you don't need to record GST on those sales. So what we find is that for people who are selling in overseas markets, then that's going to save, it easily covers its, the cost of A2X quite easily. So it's a no-brainer investment for our Shopify clients who are selling in overseas markets.
Is it easy Is it easy to reverse? So say someone is watching this and they realize I have been recording all of my sales. Can you get in there and reverse it, or is it kind of like too late?
No, no, no. So you can do it. You can go back for GST 4 years.
Okay.
So it's not fatal.
Yeah.
So yeah, so it can be done. You're not gonna it's not a joyous job, um, but it can be done. So and we've got a team, that's actually one of the first things that we do with onboarding new clients. We look at their, particularly if they're not using A2X, we look at their sales and how they've been recorded, and if there's an opportunity to restate it and get that GST back on overseas sales, we'll do that, and they'll get a refund because of that. Yeah, so correctly claim. So the solution there is correctly claim, the right amount of that you're entitled to. The other thing as well is there's GST on the sales, and there's also GST on the payment fees as well. So when you receive the payment from Shopify, it's net of Shopify fees, so Shopify payment fees, which are basically Stripe fees. It's just a rebrand of Stripe, and there's GST on that you can claim. So even though there's a mix of blended sales between Australia and New Zealand or everywhere else in the world, so there's two wins there. There's getting the GST-free sales recorded correctly, and also claiming the right amount of GST on your Shopify payment fees. So that's kind of a quick road trip on Australian GST and the mistakes that we see with Shopify sellers. Let's move on then to what are the GST considerations in overseas markets. So we could just park it there and say, yeah, you sell GST free overseas, happy days. Unfortunately, it's not that simple. So in terms of terminology, different countries use different terminology. So quite happily, New Zealand and Canada use the same terminology, so GST. It's also known as VAT, so value added tax, mainly in the European jurisdictions. So when you see VAT, it's essentially very similar to the concept of GST in that it's a consumer tax. But every jurisdiction has different rules. So that will have different rules as to when are you required to register? When are you required to do the filings? What products are subject to VAT? So, in the UK, I think children items are VAT free. So each country has its own unique quirks that you need to be aware of. But conceptually very similar to GST in Australia. So if you understand the concepts of Australian GST, it's a similar principle. What is different though, and what you need to ask yourself, and it's very similar to the approach in Australia. And let's just use this example of selling to you, Alan. So I've got a Shopify store, and I'm selling my water bottles to you, my Intrepid Advisory water bottles. Okay. The question I need to ask myself in selling to that jurisdiction is, am I required to register for GST in that country? And what are the consequences of that register, or being required to register? Okay, so you may not be registered. The actual question you yourself is, am I required to be registered? Because if you are required to be registered, then the GST or VAT will apply. Okay. So in terms of, let's look at the consequences first, because that's going to be fairly similar to Australia. Okay. So we'll go through in the next couple of slides what the triggers are. But if you are required to be registered, well, even if you're not, most countries, when you are importing the goods, so let's say if you are warehousing the goods in the country, you're most likely to have to pay GST or VAT when you import those goods into the country. Okay. Once you are registered, though, for GST, you are able to claim that cost back. So that really shouldn't be a cost to your business. But again, this is adding complexity to your business. Again, once you are registered for GST, let's say in New Zealand, it's assumed then that your Shopify store to New Zealand customer includes that New Zealand GST. Okay, and again, you can update the settings in Shopify to say, hey, I'm now registered for GST in New Zealand, and that will show in the shopping cart at the end. Okay, so it's very conceptually similar to Australia. Now, this is all predicated on the question, when am I required to be registered for overseas sales, overseas GST or VAT? And there's two triggers really that you need to think about. We'll deal with the first one because it's a fairly blunt trigger. And if you're at a stage where you're going to start warehousing the goods in that country, you are required to register for GST or VAT in that country. So to go back to that point, where you're importing and you're paying the GST at customs, okay, that's because you're required to register for GST or VAT once you're warehousing goods in that country. So that's normally the first trigger. Okay, interestingly, Australia doesn't have this rule, but most other jurisdictions do. Okay, so that's probably that in the Amazon journey, that third kind of that third step. Okay, you may even be required to register before that point as well. Okay, now most countries have what are called long arm rules, and so what the long arm rules say is that if you are selling at a certain volume or certain turnover every year, we're going to require you to register for GST or VAT, even though you're not in that country. Okay, and again, this is probably not something that's on most people's consciousness when they start selling overseas. Okay, now, unfortunately, every country has a different rule. Okay, most countries have the inventory rule. So if you've got stock on the ground in that country, you need to register for GST, and that's because you've got to pay the GST on import. But if we're just talking about I'm starting out selling overseas, how do I know when to register for GST or VAT in that country? Now, this is like a snapshot of various countries and their requirement. So with New Zealand, it's $60,000 as an Australian seller. So if I'm selling to New Zealand over a 12-month period under $60,000, I don't need to register for GST in New Zealand. With Canada, it's $30,000. So if I'm fulfilling from Australia or fulfilling from the United States more typically, I don't need to register for Canadian VAT or GST if my sales are below $30,000 on a 12-month period. Some countries, however, have a zero threshold. So it's actually from your first sale. And that's typically the EU and the UK. So these rules changed a few years ago. But once you start selling in those countries, you're meant to be registered for VAT in that country and paying and remitting VAT in that country.
So that example you gave at the start of the $110 zero GST, so your revenue is 110.
Yep.
It's kind of an example to use for New Zealand. Granted, you're selling under $60,000.
Correct.
Once you clock over 60,000, that's when you'd register and it'd kind of be a similar scenario. Okay. Yeah.
Correct. Yeah. So Australia's kind of saying, well, we're not going to tax it
Yeah.
because the end consumer's over there, so we'll let them worry about it and they can apply their own rules.
Okay.
So New Zealand rules is, well, it's $60,000 threshold. But yeah, so once you're over that threshold, so you have to assume then that 15, well, you have to reverse engineer to calculate what would 15% of the sale price be. So
Yeah.
in Australia, it's 1/11th. In the UK, it's 20%. And that works out to be 1/6 of the sales price.
Right.
This is the mathematics of the way it works. So again, some examples there of the GST or VAT rates. So in New Zealand, it's 15%. In the UK, it's 20%. Now Canada, it's complicated because you also have to pay both at a federal and a provincial rate. And the EU is complicated because there's no overall EU rate. Again, it would depend on the country that you're selling to. So that's something to be aware of. And I guess the lesson here is, if you're thinking of going into that country, you just might want to be mindful of what the GST or VAT requirements are for that country. So yeah, so that's overseas GST and VAT.
Cool.
Now, we haven't mentioned the US yet, and that's because the US doesn't have GST or VAT, and so they're a bit of an exception to the global regime. So the US, in the US, each state will have its own sales tax requirements. And sales tax is a different beast to what we just understand as a value-added tax, such as VAT or GST. Now, with sales tax is actually added on to the list price. So the list price is assumed you get to keep. In the shopping cart, once you register for sales tax and you update your settings in Shopify, let's say a state has a sales tax of 6%. 6% will be added to your sales price in the shopping cart. So it's not until you check out and go to pay that price will actually show in Shopify. So that's probably the main difference in terms of the mechanics of the sales tax. It's not something that's going to be taken out of your sales price. It's going to be added, and you're basically just the withholding agent for that sales tax. So it's a state-by-state tax. So unlike GST in most countries, and Canada's again an exception there, it's a state-by-state tax. So each state will have its own unique registration thresholds. Each state will then also tax differently and have different rates. So this is where it gets somewhat complicated. So the fundamental question is, am I required, if I'm selling in the United States, am I required to be registered in a particular state for sales tax? And it's a state-by-state analysis. So there's 50 states. There's a few which are exempt, so you don't need to worry about them. But every other state you need to consider. So the easy one is most states, and again, some states don't, but most states will require you to be registered if you've got inventory stored in a warehouse in that state or any other physical presence. So if you've got an office or staff, but most have cottoned on to the fact that, Amazon's a big industry, 3PLs, a major way of, the fulfillment channels. And so most states change their rules to capture sellers using inventory, using 3PLs in warehouses to store their stock. Again, you can be smart about this. You can use a state that doesn't have that requirement, or you can use a state that doesn't have sales tax. The next trigger, so that's what we call nexus, the main nexus. There's also what we call, or what the sales tax experts call, and I'm not a sales tax expert, by the way, and I can't provide sales tax advice, but we're just kind of going through general concepts here. And I think you might ask this at the end, but yeah, so you should be speaking to a sales tax expert around these issues. The second trigger for thinking, do I need to register for sales tax in the US, is what we call economic nexus, or what the experts call economic nexus. And that's driven by the number of customers you have or sales that you derive in a particular state over a 12-month period. Every state is different. So, and this is following a Supreme Court case from nearly 5 years ago now, or 6 years ago, which established this principle of economic nexus. And most states then legislated this change. The most common one is $100,000 of sales in a state. So if we pick our random state, and you over a 12-month period you have $101,000 of sales, you're strictly required to be registered for sales tax in that state. Okay, and so once there's a requirement to register for sales tax in that state, it means that you need to update your settings. So you're meant to register, of course, and then update your settings in Shopify, start collecting sales tax on those sales, and remit them to the relevant state tax authority. That's probably all we'll cover with sales tax today, because it is a bit of a complex beast, but you're best to talk to a sales tax expert when it comes to US sales tax. But we thought we'd just highlight that because it's one of those issues you need to be aware of when selling in the United States.
Cool. We will be doing a couple of webinars on sales tax in the United States as well in the coming months. So keep an eye out for that, because you're right, it is a super complicated topic. It's like selling to 50 different countries, right?
Yeah. I mean, every state has its own has its own rules. So yeah. Okay. So that's US sales tax. Let's move on to the exciting issue of foreign currency. This should be evident. Foreign currency is going to be an issue if it's not already in your business. So it should be no surprise that if I'm selling, in the United States, most of my customers will want to be buying in US dollars, and so you will have your listings or your Shopify store in US, the sale price will be in US dollars. Where the problem arises is, well, my base currency in Australia, or my functional currency, is Australian dollars. And so at some point, there's going to be an exchange of currency from the US dollar sale to it going into your bank account in Australian dollars. The complexity, so the first complexity we'll just cover off before we start talking about the costs, the actual costs, is actually, from an accounting perspective, is, well, is your accounting system set up to take into account that your sales are in US dollars? So you might start with a fairly rudimentary accounting system that's only got Australian dollar functionality. That then needs to be expanded to capture US dollar sales. Okay. Again, there are some shortcuts. You can, I think, but products like Xero are designed to work with something like A2X. So A2X is going to capture the US dollar sale, but it's going to allow it to be reported in your reporting currency of Australian dollars. So if you have A2X capturing the sale in US dollars, it's not allowed to report it correctly in zero in your Australian dollar. So again, that's one of the features of why you want something like A2X, is to get that foreign currency right. So let's just work through why there are additional costs in foreign currency. So this may not be apparent because you know, may not be deliberately, but there are fees that you may not be aware of. So as we said before, if you are selling in the United States, you're most likely going to price your products in US dollars so that it's friendly to a potential US customer. Now, the issue with Shopify is, if you're using Shopify payments, is that the payout from Shopify is going to be in Australian dollars. So not only is there going to be a high transaction fee on the sale because it's an international sale, if it's not a US store, there's going to be a 2% foreign currency exchange fee. So let's say there's $100. Say you sell, let's say you sell $65 in the United States. That translates to 100 Australian dollars. You might only get $98 of that because $2 is going to be the foreign exchange fee. Okay. Shopify will embed that in the exchange. So you're not going to see this nice 2% fee. So it's not a secret, but it's embedded in the exchange price. But that's the cost of doing business through Shopify. Okay, it's something to be aware of. Now, this problem becomes compounded because you might actually be buying your stock from China, and that might be priced in US dollars. So you're receiving your sales in Australian dollars. You then need to, and you've paid a conversion fee, you then need to reconvert that Australian dollars into US dollars in order to pay for the stock. So in doing that with the bank or with your foreign exchange provider, you have an additional foreign exchange cost. So this is a problem that's unique to Shopify. It's mainly because of this issue with Shopify payments only paying in the currency of where your Shopify store is registered. And so it looks to, well, who's the owner of the store? Is it the company? Is it you? And if you're based in Australia, that's the currency Shopify will always pay in. Now, that's not to say that's always going to be the case. They do have multi-currency in some countries. Australia's not one of them. Okay, so something to be aware of if you are selling in overseas markets, there are additional costs in doing so, which you just need to factor into your pricing and looking at your margins as well. So in terms of solutions to this problem, so other than increasing the pricing, is one solution. So again, if you've got the elasticity in your product pricing to do that, some of the solutions that we see people use or that we've come up with clients. So one is, look, if you accept PayPal as a payment gateway, that can be paid into US dollars. So it'll be paid into US dollars in your PayPal account. That can then be transferred to like a multi-currency account such as Airwallex. And then you can use that to pay suppliers. Or you just pay them directly from PayPal as well. So that's one, that's a very common solution. PayPal is very popular as well with the customer because of the return policy. And because of that, it's probably less popular with the merchants. The second solution that we kind of see, and this depends on your scale. So this problem obviously accumulates as you grow. So 2% is probably fine if you're only selling, $1,000 a year. But once you're doing $1 million a year of sales in the US, that's a big cost. So the question comes down to, well, do we need to think about our structure? And one solution is if you set up a US LLC as a subsidiary or within your group, that will then allow you to open up a bank account in the US and register a Shopify store to that LLC, a US Shopify store to that LLC, and get paid in US dollars. So that's a fairly dramatic or adding complexity to your structure, but it's typically when the scale warrants it. So it's quite it's a sophisticated, adding level of complexity to your structure. But again, it's one of those things that does the cost of setting up an LLC and the ongoing accounting of that, does that save us significantly in terms of foreign exchange costs? It also does open up other avenues for cost savings, such as the big one's insurance as well. So it's typically cheaper to insure your US sales going directly in the US through an LLC as well. So that's a fairly big thing to implement, but if the sales warrant it, then it's something that you should consider. Okay, so that's foreign currency. So unless you got any questions, Ellen, about that.
Yeah. No, I was just going to ask, like, how long in that journey that we've kind of spoke about do you see people doing this? Is it that revenue?
Yeah.
That's the cutoff or the cutover?
Yeah, it's typically it's the revenue. They might want an LLC for other commercial reasons.
Yeah.
So they might want an LLC if they're dealing with US suppliers. Again, for insurance. There's also for funding. So if you're dealing with the US financier, if you've got co-investors who are in the US or overseas as well. But if you're in the high seven figures of sales in the US, it's probably worth looking at the numbers.
Yeah.
So,
I think today we've kind of spoke, right? You've obviously got to have your basics down with GST first Australia, and then you're kind of understanding the other obligations. And obviously there are these issues of foreign currencies.
Yeah.
But in the scheme of things, it's well worth it, right? Like, we don't want to be like, don't expand. Like, there's so much opportunity.
No. Yeah, it's being aware of the issues and how to manage those issues.
Yeah.
Because there are ways to manage them and reduce the costs.
Yeah.
And people are just kind of scared of selling overseas because they don't know what the issues are, and so that becomes instills paralysis. Yeah.
Yeah. Cool.
Okay, so it's not all bad news.
No.
So let's talk about export grants. And again, this is one of the things that when we start mentioning it to clients, they think we're making it up because it sounds too good to be true. So the Australian government, they want exports. They want to expand the Australian economy. So they really want to encourage Australian business owners who are creating value to sell their goods and their services across the world and bring that money back to Australia. Now, they recognise that there's impediments in doing that. It's scary to do. There's a lot of costs involved. So there is a program through Austrade, which is called the Export Market Development Grant, which is a grant to Australian exporters, which helps pay for their marketing costs. So again, we're just going to focus on how this might apply for a Shopify seller selling products from Australia to an overseas country. So what it is, it's in a broad sense, a scheme where the government will pay up to 50% of your promotional costs. Okay, so promotional costs could include things like basically anything to do with marketing. So Google ads, Facebook ads. You might have you might invest in a US website, US trademarks, US patents. So costs to promote your product in overseas markets. Covers things like going to trade shows. So if you're going to the US, to a sales convention to promote your product, it'll cover up to 50%. Now, it's not a blank check. There are limits, and those limits change from year to year. So they have been quite generous in the past. So in the past, they've been, there's been some years where it's been nearly up to 300,000 a year in your spend. That's been kind of ratcheted down. So the last couple of years, the maximum has been around 75,000 a year, depending on where you're at as an exporter. The way the program works is the threshold kind of, or the gateway into the program is you need to have eligible products. By that, your products either need to be manufactured in Australia, or they need to be, in the eyes of Austrade, delivering value, or creating value in Australia. Okay, and there's, which is, they have some fairly set criteria that you need to satisfy. So it is possible, if you've got products that are made overseas, and you're selling them in America, you can get the Australian government to pay for half of your marketing costs. So it seems a bit strange, but there is a benefit to the Australian economy. You can get this for up to 8 years, so it's not a one-off payment, but you can only do it on a forward basis. So you need to enter into what's known as the grant agreement, and the grant agreement is a contract between you and the government to say, I'll spend so much a year, and the government will pay me 50% of that back. So it's generally on a forward basis, so you need to do it for a future income year. And typically these are grant agreements for 2 to 3 years, and you can go for another one after that one expires. As I said before, there's annual limits. Those limits are dependent on where you're at as an exporter. So at the moment, there's 3 tiers. The first tier is you haven't exported before. The second tier is you're exporting and you're looking to kind of grow. And then the third category is what's known as a strategic shift. So you're exporting, but you're looking to change it, change significantly in terms of the products that you sell or the countries that you sell in. Now, the overrider to this is that the scheme is currently under review, and there's a bit of uncertainty as to when the next round will be, and what the eligibility criteria is going to look like, and what the new limits are going to be. So it has been a generous scheme in the past. The mumblings that you get from the government is that it needs to be tightened up a bit. So that's the way they can do that is tighten up the eligibility. There's only a set amount every year that gets divvied up amongst the eligible applicants. And so they want to have a big impact for those that are eligible. So if they reduce the number of eligible applicants, those that do get it will get a greater share of the pie. So that's very briefly a snapshot of the export grants. So it's a bit of uncertainty, but once the next round is open, we'll have we'll be able to guide people as to whether we think they're going to be eligible or not.
Okay.
Yeah, so that's the grants. I don't know if there's any questions around that.
2, do you help your clients work out whether or not they are eligible?
Probably a nice segue into the next slide.
Oh, right, okay.
Yeah. So that kind of covers off what we're going to talk about today. So things like the grant, if you do want more information, it's actually on our website. So in terms of where do we help Shopify sellers selling in Australia and selling overseas, we can help those sellers navigate through the choppy waters. So we do that through 3 services. We do offer e-commerce bookkeeping, and we use A2X as our main tool for that, to make sure that you've got accurate reporting. and we've kind of discussed some of those issues today. We also help our clients with Australian tax, so with Australian GST and Australian income tax, so we are tax agents. And we also help people with grants, so we help people with determining whether they're eligible, and also with the application and the ongoing annual reporting with the grant in order to get paid. So they're the three main services. There's more information on our website, which is there. So intrepidadvisory.com.au. And if you want to talk to me about any of our services, there's a contact form on the page, and we'd be happy to talk to you.
Amazing.
Yeah.
Thanks. And we'll include your link in the description as mentioned.
Yeah.
But yeah, thank you so much for joining us today and walking us through. Yeah, I guess, it kind of makes you realize why you do need an expert helping you navigate these.
Yeah, so it's we've designed our services to, and we say we want to help you grow with confidence. So if you are feeling hesitant about selling in overseas markets because you're not sure what the issues are, that's when you need to speak to someone who can help guide you. Yeah, and are there any further questions?
I was going to ask, but I know I mentioned this at the start, was when you've got a client selling in Australia and they've obviously got their pricing down and hopefully understand their margins, when they go to expand, you're using all of these things that to help them set their prices. Is that right? Or do they they need to work that out? How does that work?
I think, yeah. So I think when you need to take these considerations on board when you're establishing your pricing in the overseas market, particularly like in the UK, for instance, if you know that 1/6 of your sales price is going to go to VAT, your pricing model that you're using in Australia is probably not going to work in the UK. So you really need to factor in both, from what we discussed on the webinar today, there's foreign exchange cost, there's VAT, and the UK is a completely different market. So your product might be, you might have a natural competitive advantage in the UK. So you might dominate that market because it's a new product, and you might have the ability to actually have a higher price. It's also going to come down to, well, how are you fulfilling your product? So are you fulfilling from Australia or from the UK? Because that's going to have an impact in terms of freight and also delivery costs to the end consumer. So it's good to know what these issues are so that you can factor that into your pricing calculation, and from that, it's probably more important to actually work out what your margins are on the sale.
Yeah, cool.
Yeah.
Awesome. Well, thank you so much for taking the time to run us through all those things, and that's all we have time for today.
Great. Thank you for allowing me the time to present.